Pashupati Advani as well joins in. So let's chat about the market in greater detail with him. Pashu, what has been your sense of what's causing this kind of weakness in the market that we've seen in the last couple of trading sessions, with banks really being at the fore? Does it seem like rate cut hopes are really diminishing after what we saw by way of the IIP data, and also some nervousness in terms of the inflation figure today?
Well, I actually believe that the inflation figure is coming closer to what the RBI feels is a norm. I mean, that figure is supposed to come out at noon today, Indian time, and I think that will be an indicator. I actually feel that they will cut rates, but not, the question is when, and I guess the despondency in bank stocks is because of that. But the real issue is that the real culprit, I would say, that's sitting on top of our market is this small thing called offer for sale, because we're seeing a lot of paper, predominantly government paper, as well as some private sector paper, all coming offer for sale. And that's putting a load on the market, which is, taking the money, the fresh money that's coming into the system and sucking it into these kind of stocks, either directly or indirectly.
So, to your mind, what has caused this year's correction? Poor earnings or poor macro?
Well, I don't think people are even looking at earnings and macro. They're actually looking at just the printing of money that's happening all over the world. The Americans said we've got to sequester, we're going to stop printing. Now all of a sudden they're talking about having to continue to print. And I think that that's the driver. I've always been an advocate that flows are the driver for most emerging markets, and I still hold that view.
But we've gone down despite strong flows. I mean, we've got about $8.5 billion of FI money this year, and Indian markets are down on a YTD basis. So clearly, money is no longer doing the trick for us.
No, but against that $8.5 billion, we've also had a huge number of OFS. I don't know the exact number. You probably could pull it out pretty fast. But I think that's the reason, because against that flows, it's not net flow, because we are seeing new paper coming into the market.
DIs have been sellers, of course, that's a concern.
Well, DIs have been sellers, as I said, directly or indirectly. So they are selling their good stocks to basically make room for what they see are potentially great stocks in the future, and they are buying into the OFSs. And every day there are one, two, it's lots of fun in that space.
Right. Pashu, I mean, talking about OFSs, since you just brought it up, NALCO is the next one which is in the pipeline, slated for March 15th, and it seems like the government is looking to sell a 5% stake with a green shoe option. They're looking at divesting a total of 10% as well in the company. Do you think if the pricing is right, it could garner a great response? Well,
again, yes, but I'm also hearing through my sources that they're probably going to cut that OFS a little bit, simply because they don't think they can sell this the value of paper that they want to sell at this kind of level, because the market is a little soft, because it's the end of March, because mutual funds and DIs are not getting net inflows, because FIs are sort of sitting on the sideline for the next couple of weeks. For that reason, they're actually looking at probably trimming the size of the offer, and maybe either not exercising the green shoe or making it a smaller stake.
Pashu, what's the call on TCS and Infosys and the rest of the IT majors? Is it time to book profits and invest that money somewhere else?
Well, people are looking at India from what are the stocks that are going to move in India, and obviously the IT pack with the rupee having gone from 45 to 55 over the last 1 year should deliver the returns, and we've seen it. I mean, all the IT stocks have moved significantly in the last 6 months to a year, and but people are still bullish on Indian IT. I don't think that, within the pack, maybe they like some stocks better than the other. You may say I like HCL Tech versus a Wipro or a TCS, or a TCS versus an Infosys. But I think at the end of it all, people are comfortable owning that sector, and that is a predominant part of our index. So I don't think you can actually miss it.
Pashu, what is your take on the mid-cap space? Do you think mid-cap stocks have fallen in a deep hole, and it will be a while before they will be able to climb out of that deep hole?
Whenever there's these sort of pushes downward on the market, the first ones that tend to fall out are the mid-caps, because a lot of investors have sort of piled in, and they move very violently both ways. So I think what you're getting is that, the large caps are coming cheaper. You mentioned NALCO. NALCO has come from close to 50, and you're talking about an OFS price of 40. So people would obviously look at something like that, which is going to come down significantly, and maybe take a punt at that, which is actually what the government wants them to do. They want retail investors to come in and buy these PSUs and hold them for 2-3 years. There are all these incentive schemes to do that. And I think that, those are the sort of things that are taking away from the mid caps, I would say.
Now, your firm's FY14 end target is that Sensex could cross 23,000, which means the next 12 months, you're of the view that Indian markets will appreciate by 17-18%?
Yeah, I think so, because I think that...
It's a tall order.
It's a tall order, but I think it's also driven by flows. Whatever you talk to people who are overseas, they're actually saying that, we like India, but, ... And I think that, as we see more and more things that come forward, we are actually, as we see more and more policy decisions being taken, we actually see that, things are moving in the right direction. And we are making a bet purely based on flows. And I think that those flows will continue. If we get another year of 22, 23 billion, then I think we'll get there. But we may also see lower. I think this is a great year for volatility, but I think we'll see up before down.
Pashu, what's the call on the real estate space? Some of these stocks have really been making new highs. Are these just trading moves, or because they were so beaten down, there is some valuation play as well?
Well, I think that there is the fact that, the prices of, the salaries are going up simply because of inflation. I think that's kickstarting the bottom end of the market. There's also a lot of talk that there will be some relaxation in terms of the FSI given to companies all over the world, all over the country, as well as some loosening of environmental clearance, particularly in the big cities. I think that's actually driving people to look at real estate. And if you look at it, I guess the funny way of looking at it is saying it's better to buy a real estate stock instead of a flat, because at least it's liquid. So maybe that's another way that people who are reaching out are actually buying into those stocks as well.
What about the mid-cap sell-off though, Pashu? Are there any buying opportunities there, or would you completely steer clear of high promoter pledge quotient names?
And, high promoter quotient, it's good that we are one of the few countries that actually discloses how much has been pledged by promoters. And I think that's a good progressive governance step. But I think that, yes, people are worried about high promoter pledge shares, because that does put pressure on the stock. And means that, the promoter who has the option to buy 4% without disclosing is not able to buy any more if he's pledged and tapped out. But it also means that, promoters themselves, some of them, you have to sift them and see which ones actually they like, because if they feel that they're in good businesses and that, maybe there's an institution that wants to sell the stock and they end up having to pledge to buy it, that's probably a good sign. But it's very difficult to tell which are the good ones and which are the bad ones. And that's the challenge that we face.
Pashu, you're bullish on IT, but your firm is bearish on TCS and on Infosys. Why is that?
Because they like HCL Tech. Because they like HCL Tech. I think it's just a within. It's not so much a, I think as a sector, we are overall slightly bullish, but we like certain stocks better than other stocks. And we feel that, Infosys has run up, TCS is okay, and we like HCL Tech.
Where is value in this market?
In all of them. People are buying all of them simply because, they don't know which one is going to win.
TCS at 20 times, it's not a value stock.
Well, nothing is a value stock. You print more money, nothing will be a value stock. You buy a flat today for 20,000 rupees and tomorrow it's 25,000 rupees. Are you selling it? It's the same logic. You've made 20% in 2 years, but are you selling your flat? The answer is no. You're buying it because you're buying it as a proxy of a big chunk of our index. And I think that's what people are looking at, certainly from overseas.
Do you think stocks like Asian Paints, HDFC Bank, Sun Pharma, quality blue chip stocks which are trading at P multiples of 20 plus, that quality premium will continue and it will expand further?
Absolutely. I believe that people are looking at the quality premium, particularly the new money and the size of money that's coming is looking at that premium first. It also drives our indices, and I think that's where the first money is coming. And whenever you have a sell-off like we've had in mid-caps, the new money comes to quality. And then after a while, the money comes into mid-cap. So we have to go through the PSU divestment, the OFSs, and perhaps then we'll have the movement in the mid-caps that we would like to have.
Pashu, what about the currency though? And because of the kind of weakness that we've seen, you think part of the problem is that as well, which is why we're seeing FII withdrawals, because they're losing out money purely because of the currency going down? Well,
the thing is that the currency is has been an issue. It's affecting everybody, and I think people are a little surprised to see it at this level. The good thing is that by putting large duty on gold import, we've certainly lessened about $3 to $4 billion worth of outflow that was going into gold, and I think that's a good thing, and that's actually affected gold prices worldwide. And so I think that, we are trying to stem the tide. We are trying to, we had a current account deficit of 5%. I think we're coming back to 4, maybe, 4.2, sort of on month basis. And I think that's a big step that the government has taken.
So finally, Pashu, what happens on the 19th? You could see some CRR cut, a very hawkish tone, and the frontline rates remain unchanged. What's your call?
I think we'll have a small rate cut simply because I actually estimate today that the wholesale price index that is coming out at noon is going to be maybe 6.2, 6.3, something like that. Believe that's the expectation. And I think that's close to the zone that the RBI is comfortable with. Plus, we'll see the taxation numbers that have come in on March 15th. Plus, we'll also see that, the government is doing the OFS and trying to fill the gap by actually selling shares, which is not only compliant for governance reasons on the market, but also gives them money. And that combination means that the government is actually on a track to try and improve their deficit. And I think that's what the RBI is looking for before they actually, begin to cut rates. And I think you may see that on the 19th.
Pashu, if I look at developed markets, there is a lot of data which is backing global markets. US housing market has improved. US unemployment rate has come down. US retail sales have improved. News flow from Europe also has improved. But if I look at Indian markets, still there is a lot of hope. Still there is a lot of hope which is fueling optimism.
Well, we tend to follow those markets. So in a sense that if the US market has turned, people are saying, okay, US market housing has turned, therefore Indian market housing will turn in 3 months. And I think that's what's driving real estate stocks, for example. So it's the expectation that we will follow those markets. We used to be separate. We are now closer together. And I think we are following the same trends.
So it's no longer about decoupling?
No, I haven't seen a decoupling for a long, long time. And I don't think you have either.
This year, Indian markets, unfortunately, are lagging global markets. Now, global markets eventually will pause or they could take a U-turn. So when global markets will take a U-turn, do you think Indian markets could lead the fall?
No, because I think Indian markets jumped up way ahead of global markets last year. So we've come back, and then we're also going to be, as I said, if it wasn't for this huge amount of OFSs that we're having prior to the month of March, the market would have been higher. And it's not that far off. I mean, the Dow's had 9 straight winning days. Simply
longest
because of
till 1996.
Sorry?
It's the longest winning streak since
Correct.
1996.
Yeah, and I guess that's a great statistic. And it doesn't look like it's stopping, though the wins are small wins happening every day. I think it's a question of, as I said, we are based on supply and demand. We've got a lot of new issue supply, and therefore, that's actually holding the market down. And I think once that supply is over by the end of this month, then we'll see some movement again upwards.
Okay, let's construct a portfolio, then I'll allow you to escape. Give me 3 high-risk, high-return ideas.
Well, I would prefer to give you sectors rather than stocks.
I got a whole list of, stocks and sectors you're bullish on. So why don't you nail it down for me? It'll be much easier.
I actually think that we were making a medium to long-term play. You should buy infrastructure. Okay. And, I think that's something that we like. The second thing is I think that, you could look at the banks also. Now, right now, there is expectation of rate cut, but banks have to be traded with the volatility.
It's not specifics. I mean, I can think of 200 listed in the infra companies, and there are about 150 listed banks.
I will send you our reports so you can read them, Nikunj. No, I mean, I'm just saying that, these are the types of stocks. Okay. And I think you have to be long the beta in an emerging market. And I think that's what, when you buy infrastructure, you buy some smaller tiered banks which are probably going to merge. Those are the plays that are going to.
So buy L&T.
Sorry?
Buy L&T?
No, I would say go to a next level down of infrastructure, maybe an IRB.
Okay.
So, I think also they're changing the rules for infrastructure companies, which are going to help the numbers work as well. So I think that's going to help the whole sector.